Hey everybody, it's Peter Schiff. It is Wednesday, August 25th, 2010. Well, a couple days ago, we got information on a huge decline in home sales. I think it was about a 37% drop, much bigger than what people were expecting. The inventory of unsold homes, the supply is about a 12 and a half month supply, which is the largest, I think, since 1983. And of course, it doesn't count a lot of properties that the banks are too afraid to put up on the market or too afraid to foreclose on. And why people are still surprised that housing is so weak is beyond me. It's going to get a lot weaker. Prices in most parts of the country, I think, are still too high. People still don't have the resources to buy these houses. The only reason that people are able to buy houses today is because of government subsidies and government guarantees and artificially low interest rates. And, people are looking for housing to lead us out of this recession because they say it led us out of all the previous recessions. Well, the reason that housing was able to quote unquote lead us was because housing is what responded to government stimulus. It was the cheap money, the low interest rates, and the subsidies that created the phony growth that people think led us out of recessions. But all it did is enabled Americans to spend more money, to lever up, to buy things they couldn't afford. Ultimately, it was that housing bubble that was the problem. And now that the housing bubble has burst, that stimulus doesn't work anymore. It can't. That bubble has busted. There is no way to reflate it. The government should stop trying. What we need is to allow the economy to restructure. We need more savings. We need more investment. We need more production. But we're not going to have any of that if the government tries to redirect all of our resources towards trying to reflate a housing bubble. It will not work. I was just watching a Cubload today, and they had a realtor on there. And of course, the realtor is saying it's a great time to buy. They always say that. And she had acknowledged, though, that she thinks home prices could still fall, but she said, you're throwing your money away on rent. And then when the host pressed her, she said, well, yeah, who cares? Real estate prices might fall another 2 or 3%, but why do you need to pick the bottom? As if she knows that they can only go down 2 or 3%. What if they go down 10 or 20%? What if they go down more than that? And of course, what about the high cost of ownership when it comes to maintenance or interest? Remember, one of the reasons, and I pointed this out in my book, The Crash Proof, and in many of my commentaries, that one of the reasons that Americans were so interested in buying homes in the past was because they expected them to appreciate. It was the appreciation of the homes that made them so desirable. It was one of the reasons that so many people were willing to overpay or devote such large percentages of their incomes to mortgage payments, was because of the payoff and the appreciation. But now that Americans have a more realistic outlook on the future price of homes, that they don't think they're going to appreciate, they don't want to overpay for them. And that's what's changed. I mean, if the government wants to get the housing bubble back, they're going to have to guarantee price appreciation. Now, I wouldn't put it past them to try to do something that insane, but unless people believe that houses are going to go up in value, they're not going to be willing to overpay for them the way they were before. And of course, the lenders, now that the lenders have a more realistic outlook, they won't lend unless the government guarantees it, which again, Bill Gross said without a government guarantee, he wants 30% down. He wants 4% or 5% more in the way of interest rates. And, speaking about not understanding the problem, I saw Howard Dean on CNBC earlier today, and he was trying to defend why we need to let these Bush tax cuts expire on the rich, but we need to make sure we keep them for the middle class. And according to Howard Dean, he says we need to have the middle class to have money because they're going to go out and spend it. They're going to spend every penny, and that's going to help the economy. He said the rich, well, they're just going to invest their money. And he said that has a dubious, that's his word, a dubious impact on the economy. I mean, come on. So we want to take money away from people who are going to invest it or save it and give it to people who are going to go out and spend it, and that's going to help the economy? How can anybody think that the problem with the U.S. economy is there's too much saving, there's too much investment, and there's not enough spending? And so what we need to do is discourage investment and saving and subsidize spending. It's complete nonsense to think that. Now, also wanted to point out that as the dollar made a new 15-year low the other day against the Japanese yen, the only thing that kind of kept the dollar from falling was talk from the Bank of Japan that they were going to intervene and try to prop up the dollar, which means they're going to create more inflation in Japan, which I think is one of the reasons that we saw a lot of strength in gold and silver in particular today. Was up, I think, 40 or 50 cents an ounce and strong yesterday. In fact, if you look at the gold Dow ratio, I think the Dow Jones is now worth about 8.2 ounces of gold, and it's really starting to break down. And some of that has to do, I think, with the Bank of Japan saying that they're going to be easier in their race to the bottom with the U.S. dollar. But I don't think that this is going to stop the yen from rising against the dollar, because we have much worse problems than Japan. Now, I wanted to mention also briefly, there was a Wall Street Journal piece out on me today. It was supposed to come out about 2 weeks before the election, because they did the interview a long time ago, but instead it came out 2 weeks after my Senate election. It would have been nice to have some publicity while I was still a candidate, although the article was very slanted. You know, the Wall Street Journal did an article about me back in early 2000, January of 2009, mainly focusing on how much money my clients lost in 2008. Now, you know, they don't care about how much money my clients may have made in the decade leading up to that 1 year. All they cared about was how much I lost in 2008. Now, I contacted those same reporters in early 2010, said, hey, do you want to do an article about how well my clients did in 2009? And their answer was, no, we have no interest in doing that article. We think that if you did well in 2009, you simply got lucky. So anyway, the Wall Street Journal approached me again, and they wanted to do a story about me, the stockbroker, the candidate, and all that. And again, if you look at the article and you look at the video that is highly edited, they took hours of video, but they tried to portray me, I think, as kind of a charlatan. That I claim that I predicted the class. I claim that I can help people protect their wealth, but I can't. All I do is make money for myself. They focused on the fact that I live in a big house, that I drive an imported car. There are a lot of people that have nice cars and live in nice houses. That isn't the story. The story should have been about my accurate forecasts, about my Senate campaign, about all the things I got right. All they wanted to focus on was the fact that, again, my accounts lost money in 2008. Well, everybody's accounts lost money in 2008. I mean, whenever they interview Warren Buffett, they say, wait a minute, you don't know what you're talking about. Your accounts were down 40% in 2008. Why are we talking about you? I mean, everybody that gets interviewed, their clients lost money in 2008. Did they focus on the fact that they might have made money in every other year that I've had accounts? No, they didn't look at that. Did they want to focus on the fact that I helped create a hedge fund that shorted subprime mortgages where people made a lot of money in 2007? No. They don't want to focus on the fact that I've been making the same investment advice for 10 years and that it's done very well for all those years except 2008. They simply want to use the fact that my clients lost money in 2008 to try to discredit me. And if you look at that piece, they write about, look, Peter's extreme, his ideas are not shared by other people, so maybe we should discount them. Obviously the U.S. economy is not on the verge of collapse, but Peter Schiff thinks it is, and he's investing that way anyway. I mean, look at the piece, and I think you'll come to the same conclusion. And, think about it this way, and I know I've mentioned this before. I predicted that we would have the worst recession since the Great Depression, that we'd have over 10% unemployment, that the housing bubble was going to burst, that when it did, national real estate prices would drop 30%, that they would drop 50% in some parts of the world, that when that happened, Fannie and Freddie were going to go bankrupt, that many of our leading banks and financial institutions would fail, that the government would be irresponsible and bail them out with cheap money by slashing interest rates, by outright bailouts, that we would have $1 to $2 trillion a year deficits. I mean, I made all these predictions. And the thing I got wrong is my assumption was when all this happened, the world would be smart enough to sell the dollar. And that ultimately, long-term interest rates would rise because when they dumped the dollar, they would also dump treasuries. Now, in 2008, that hasn't happened, right? So what? It doesn't mean it's not going to happen, and it also doesn't mean that all of my clients have lost all their money because 2008 was a bad year. I've never tried to hide the fact that 2008 was a bad year, but come on. I mean, can the Wall Street Journal ever give me credit for getting anything right? I mean, look at all the people who got everything wrong, who've got nothing right. They have a lot more respect for them. Now, maybe it's because, I don't work for a big firm like Goldman Sachs, or maybe because I'm not a professor at a major university. I'm just an average guy working for a small firm, and somehow I don't have the Wall Street Journal's seal of approval. So I don't want to acknowledge that I got anything right. They've never reviewed any of my books. We've sent the books. They never did a review of Crash Proof. They haven't done a review of how an economy grows and why it crashes. It'd be interesting, given the fact that I did get a lot of stuff right, to try to say, hey, this guy is credible. He's got a pretty good track record. He saw a lot of problems when other people couldn't see anything. Maybe we should listen to him. Maybe his views on what's going to happen to the U.S. economy. And I gave this reporter a lot of great footage. Unfortunately, all of it ended up on the cutting room floor, and all they showed was what they wanted to show. Anyway, read the article, check out the video, and see for yourself. Anyway, that's it for today. Take care.